Hello everyone. Welcome back to today's market recap. U.S. cash markets were closed for Martin Luther King Jr. Day, but the charts still tell an important story. SPY and QQQ finished slightly softer, and Treasury Yield stayed flat, all while global news drove sentiment into defensive territory. Looking at SPY, we see a very shallow intraday range around $6.91 with a slight downward bias into close. There's no strong directional conviction. Price action looks choppy rather than trending. That suggests traders are hesitant, waiting for catalysts rather than pushing hard in either direction. This shows market participants are in a holding pattern, digesting macro news and geopolitics rather than trading with conviction. The QQQ structure also shows sideways movement with a small tilt lower, roughly around the $621 level on close. Tech has been more sensitive to macro headlines, especially tariff and geopolitical risk, and this can keep growth-oriented stocks under pressure. We can see buyers are present, but there's a lack of follow-through strength. The 10-year Treasury yield is pinned at around 4.23%, showing very little movement. A flat TNX suggests bond markets are balanced, not aggressively pricing in recession or expansion, but also not moving in support of risk assets. Flat yields often mean equities lack a fuel source for strong directional moves. Outside of price charts, one of the biggest drivers is a renewed tariff threats from the U.S. towards Europe over Greenland negotiations, which sent stock futures lower and pressured markets globally. S&P 500 and Nasdaq futures were down over 1% at one point, reflecting unease about trade escalation. This geopolitical headline is one of the clearest explanations for lack of upside and range-bound trading today. Traders are wary of policy-induced volatility. So what does this chart behavior, combined with geopolitical headlines, tell us? SPY range-bound equals lack of conviction. QQQ weak bounce equals tech remains sensitive. Flat yields equals no macro bullish kick. Futures weakness due to tariffs equals sentiment knocked back. When markets trade like this, it often means uncertainty is the dominant theme. Traders are watching news, not price levels. Today was a reminder that external macro and geopolitical news still matters, even on holidays when U.S. markets are closed. As we look ahead, prepare for volatility around trade discussions and tariff developments. When markets are range-bound with little volume, focus on levels, risk management, and watching reaction to key news catalysts. That's it for today's recap. If you found this helpful, drop a like and hit subscribe. See you next time.